I'm so excited to introduce the next panel as well. Blockchain and crypto is one of the biggest inventions of our lifetime. And we have an amazing panel to talk all the way through it. I'd like to introduce to the stage Jackie Wong from Wall Street Journal, Chris Marsalek from Crypto.com. We'll have Julian Hosp from 10x, Michael Novogratz from Galaxy Digital, and Joseph Lubin from Ethereum. Please give them a warm welcome.
Hello, everyone. We have a great panel here today. And before we start, if you want to ask questions to this great panel, you can use your app and send questions. And then later, I will pick up some questions and ask them. So to begin, I mean, we have a really eventful 2 years for the crypto world. I mean, prices has gone up and come down, tons of new projects. So I just want to know, where are we now? Are we still at a very early stage, or are we closer to something that is going to happen? Joe, why don't you start?
So we're still at a very early stage. The tech is not very mature at this point. We're essentially still at the end of phase one of the technology. Phase one essentially has these new network systems that are all processing transactions at every node of the system and storing all the data at every node of the system. There are subtleties. It's better than that, but that's the general architecture. We're just moving in the Bitcoin ecosystem and especially in the Ethereum ecosystem to having this phase two happen, where in addition to the radically decentralized layer one that enables trust in these systems, we're building a layer two set of technologies that will enable high transactional throughput, so thousands, tens, hundreds of thousands of transactions per second for different kinds of applications. That technology can link in some architectures to the trust layer in Ethereum and enable you to build exchanges, build game systems, build shared infrastructure with high transaction throughput, and still, for your value token, still benefit from the security of the Ethereum system. We're going to be moving into a world, an internet of blockchain systems. It's going to be a radically different architecture for society, and it's going to take a bunch of years to unfold.
Maybe I'll answer from the market's perspective. 2017 literally was a mania. We had a retail mania, and it was a global retail mania where token prices went to extreme levels, and enthusiasm went to extreme levels. It was probably the first mini bubble we had. It popped in December and January with Ethereum at 1,500 and Bitcoin at 20,000. And it was led by retail investors. 98% of trading was the little man. And now it's popped. And the markets are soft in lots of ways. The crypto markets just trade soggy. Underlying that sogginess, however, on multiple fronts, there's progress being made. Joe just talked about the progress on the computer science, right? The infrastructure side, which is at the core necessary for anything to happen. And maybe it's 1 year, maybe it's 3 years or 4 years away from these systems being robust enough to process enough transactions to have the dream come true. There's also a ton of private investing. Institutions are starting to move in. They're moving in through venture funds. And so if you look at phase one of the speculative rally, very few of the Silicon Valley firms participated. Marc Andreessen did and Union Square Ventures did, but broadly it was missed by venture, and they don't want to miss phase two. And so even though the tokens are soft, underlying markets, the private investing markets are very, very strong. We also look at talent moving into the space. Even when Bitcoin went down, people moving into the space ships kept going straight up. I look at our summer interns. We've got 13 summer interns, and Blackstone would be proud to have a class like ours. I'm sure at Consensus they have 50 summer interns. And so there's so many metrics I look at that says the underlying fundamentals of this whole revolution are strong as can be. And finally, I'd get to something I think is important. People didn't pay enough attention to token economics. In a lot of ways, the token's almost more interesting than the computer science and the blockchain itself. It's how do we have this coin or token as an incentive mechanism to drive behavior, to create social networks. And I think going forward, a lot more time and thought is going to be put into how these tokens actually work, because they work different for different systems. And so, across the board, I feel pretty positive.
Yeah, and it's actually, it's not the first bubble in our ecosystem. It's not going to be the last bubble. There were so many epic bubbles before 2017 that blew people's minds, and now they're just tiny little pimples on the curve at this point. There was essentially one bubble in Internet version 1. There was one massive bubble, there was a big blow-off, and quite a number of years of building society transforming infrastructure. There's a lot of creative destruction that happened in that period. All of that creative destruction ended up turning into a real value for society. So I think the internet was more narrowly focused, information, e-commerce, etc. Blockchain is going to pervade all systems, and so we're going to see lots and lots of growth in the ecosystem.
And I think we have to remember that we only have 20 to 30 million cryptocurrency holders globally. So it's essentially super early days.
Yep.
And if you look at, if you probably add up the capital raised by blockchain startups last year and this year, the number is going to be insane, probably around $20 billion by the end of this year. So you've got thousands of engineers and thousands of projects, and a lot of talented people coming into space. Projects are well funded, prices down, but this is the best time to build.
Yep.
And once the technology catches up, we will see another cycle. It's not the first one, as you, Joe, mentioned, and it's not going to be the last one. There are other things that are happening. Institutional investors coming in. People are solving problems like custody of digital assets. All those things will converge. And I believe strongly that once the price trend reverses, media attention is going to be huge, as it was last year.
Yep.
Yeah, if you think about putting numbers around it, in 1999, the internet got to $6 trillion. The NASDAQ got to $6 trillion in market cap. Even in January, when the frenzy was at its high, total crypto market cap, both public and private, throw it all together, maybe got to a little more than $1 trillion or even $1.25 trillion. And that's 99 versus 2018. It's also, the internet was a domestic focused thing in the US, where crypto really is a global phenomena. And so apples to apples, we kind of did some math and thought that $6 trillion should be closer to $25 trillion. And so we're 50 times away from it being a bubble. What'll cause that, and we will get there because the technology is cool enough, the story is promising enough that people will have an unbelievable case of FOMO and they'll want to participate, is institutions coming in, right? You're not going to change the world without the institutional money moving in. And the architecture to get that happen is getting closer. Custody being a big piece and regulatory clarity.
Yep. Julian, what's your thought?
For me, I think at the moment the question is what problem are we trying to solve with all these decentralized solutions? What's Bitcoin trying to solve? Not what's Bitcoin trying to do, what are they trying to solve? What's Ethereum trying to solve? What problem is it solving? And I think we're still trying to find a way in how this works. And I think the solution that Bitcoin or Ethereum is trying to solve right now maybe is not needed at the moment because Bitcoin or Ethereum are not scalable enough at this very moment. And I think what's happening a lot, and that's confusing a lot of people out there because these projects are doing great marketing, but they are actually really, really bad, is they're trying to solve the problems of Bitcoin and Ethereum without forgetting what are the problems that actually Bitcoin and Ethereum try to solve. So they're trying to skip a step. And this is something that looks really nice at the moment when you have unlimited scalability on a base layer and you don't need to have a full decentralization. And I still think we're going to see a huge like cleanup of these projects that are on the base layer actually not decentralized. Simply because if you don't have a layer that's decentralized on the base layer, what problem are you trying to solve? And if, in my opinion, a blockchain, a decentralized blockchain, should solve the problem of a centralized party. So if I create a new centralized party in this new solution, then I personally prefer to be in a solution that is already trusted or is a little bit trusted, and call it a government, a central bank, or a company, and so on. So this is just a bit of a small rant probably on kind of inspiring everyone here to really ask yourself a question. If you see this new project out there and that has all these nice promises, what is the problem they're actually trying to solve, and why they're not trying to solve it through an SQL database?
So
because it would be more efficient sometimes.
At the application layer, there are hundreds, thousands of projects around the world that are trying to solve problems for musicians and nodes in supply chains, and people interested in longitudinal healthcare, and people interested in bounty systems, and people interested in tokenizing real estate. So people interested in trading, cartoon renderings of cats, basically. These kinds of applications, which will have real users, are the use cases that are driving the development of the technology. So we've built this new kind of decentralized World Wide Web. It's a sort of experiment. It's a proof of concept, and now lots of different projects are identifying real niches in which to operate, and
yeah, but Joe, Ethereum is really building a strong decentralized platform, right? And you are investing a lot of time, energy, great developers on keeping this super decentralized. How do you personally see these projects who skip the first decentralized layer, straight away jump to the second layer and say, okay, we're scaling, we're super fast, but let's say this doesn't work, what is the fallback plan? And that's why I'm personally a bull on Ethereum, right? And that's me personally.
Sure. So I don't see them skipping the first layer. If you're talking about the first layer being that trust layer, I do see the next phase 2 of blockchain technology, making use of scaling techniques, state channels or side chains linked in via different mechanisms. And the use of those technologies is driven by these projects that are trying to serve real customers. And so you put out a project, it puts a little strain on the Ethereum network, it shows us where in the different clients we need to fix some things, it shows us where in application architectures we need to re-architect things, and we progress that way.
One of the, just as of late recently, I used to think identity is the super app of blockchain. It probably still is, but now I'm starting to think maybe the ultimate need for blockchain and the reason it has to succeed is that with the combination of siloed data and big data that we see all over the world. I look at China, where I think Tencent and Alipay broadly own all the consumer data, and I match this monster called AI that's growing exponentially smarter by the day. And it's a really scary future if it's in your DNA, giving it out to a company like 23andMe for free, or people having your spending data or your preference data. And, the blockchain literally is the firewall, or can be the firewall that protects our privacy from a maybe dystopian future. And, I think that alone is a reason for all of us to be investing in this space.
Yeah, so the internet, as awesome as it is broken because it doesn't have an appropriate identity construct. We and other companies have built a self-sovereign identity construct that enables us to encrypt aspects of our identity, to control it from our side of the browser, to selectively, granularly disclose in situations we designate. So because there is no appropriate identity construct, exploitative, abusive business models have developed and dominate the internet right now. But they dominate with kind of weak personal information. Right. If we are putting much higher quality information on data markets and monetizing it for ourselves if we choose to, then we can essentially enable much more actors in this AI race. So rather than a few states and a few social media companies who have all the data and can build all the AI models based on that data, will have open data markets with higher quality data, and it's still going to be an arms race, but it's going to be a much more broadly distributed arms race.
The entire purpose of what we do at Crypto.com is to give the next generation the control of their money. They should get control of their identity, control of their data.
Sure.
Otherwise, we face a truly scary future, dystopian, as
or
Mike
present.
mentioned. Yes,
Scary present.
It's really scary.
We have a book that we advise every one of our team members when they join at 10x. We advise everyone to read 1984, and it's so true, right? This dystopian future, and I think when you read that and you see the worst, and then you realize, wow, if you can cut out the big brother, it's powerful.
Okay, we have some questions from the audience, which mainly interested in like crypto as a currency. You mentioned many use cases for blockchain, but because it's called cryptocurrency, can it really be used as a currency given that it's so volatile? And can it really be used for payment for the same reason? Is it one like useful use case? What do you think as a currency?
So I've traded currencies most of my life. I lived in Hong Kong 7 years. I ran the currency business. And I traded both developed market currencies and emerging market currencies. And I would tell you that for something to be a real tradable currency, it needs stability. And so I don't see Bitcoin in any short term, or Ethereum. And Ethereum doesn't, pose itself as a currency of being currencies. I'm not going to buy my shoes with Bitcoin. I see Bitcoin more as a store of value in lots of ways, and Ethereum as a commodity, as a fuel that's powering this new system. And so I don't really, and I also know regulators aren't going to give up control of their currency without a fight. And so I don't think in the developed world, calling them cryptocurrencies actually serves anything.
I agree.
In the developing world, where there's less control over some currencies, maybe people could use, Bitcoin or a stable coin to buy and sell things, but I really think it's more system change than currency.
Yeah, so Bitcoin was an experiment in monetary theory that grew wildly successful. It wasn't really architected well as a currency. Ether, as Mike indicated, was always intended to be a crypto fuel, one of many crypto commodities in sort of a new information ecosystem, and it was never intended to be a money. We do have price stable tokens. There's Maker DAI that has quite a lot of value in it right now that's maintaining good stability. There are other projects contemplated being built right now. Circle's driving a project called Center, which will have different state-issued currencies essentially represented as tokens, price-stable tokens. But we're moving into a qualitative shift in the nature of money. So there will certainly be lots of state-issued currencies, but we're moving towards a world of global villages where you can have decentralized governance, you can define goals for your ecosystem, you can define mechanisms by which you execute those goals, you can raise money, essentially your own cryptocurrency or token representing value that people care about in these networks, and these networks can support a band or they can cure a disease, and those particular value tokens can be focused without the baggage of other tokens on those particular goals.
And this is something actually to tie in there that I think many people underestimate. When you tokenize a lot of assets and they suddenly become very interoperable, suddenly you can own your Apple stock, it's tokenized, and you can actually spend your Apple stock directly for your coffee at Starbucks. You could store your gold,
but
and
who
you
does
could
that?
directly...
Why would you want to spend your Apple stock for your coffee at Starbucks?
I mean,
well,
this
if
will
you're
work. Okay,
if you're
so,
bearish on Apple, I might rather have the
Is the
coffee.
question why or how? Is the question why or how?
Why?
I mean, because then you don't, I mean, if you listen to some economic theory, then cash is just another asset. So why would you use cash for everything if you could just, you see all the other assets also as assets. So I could say, I don't need to have cash all the time because it's actually a bad performing asset in an inflationary environment. Yeah. So I could use I could use it, and I could stay in assets that are better in this environment. But then I need to trade my assets into consumable goods. So I could stay in a real estate token, I could stay in a stock token, and I don't need to constantly be in cash because that's the only thing that's accepted at Starbucks. Yeah, so that's where I see interoperability.
All those digital assets will be rendered in the same technology, and so they'll be tradable against one another. You won't have these siloed markets where you can trade equities against money or commodities against money. The way to make all that work is by having intelligent wallet systems, intelligent point-of-sale systems, so that I take all of my value tokens, my Ether, my US dollar stable token, my Beyonce tickets, my kilowatt-hour tokens, and I order them by which ones I want to get rid of first. I go to your point-of-sale system, you order them as well, and it doesn't matter to me what I'm paying in. I just know I'm paying in the token that I care about less at this point.
So I agree. So I would actually think that we're moving to a place where the exchange mechanism is going to be quick enough and frictionless enough that you're still going to think in a base currency. So you're going to rate things in dollars if you're an American, or even if the crypto revolution is as wildly successful as it could be, there's got to be one thing people base things in. And so I'm not going to sell my Beyonce tickets to pay for my college but 20
years ago, everyone said that about the internet as well. I'll never be on social. I'll never be on Facebook. And then suddenly there's a mind change because you will see the upsides. It's not going to happen tomorrow. But it's going to take 20 years.
There actually is no upside to selling your shoes to buy your coffee.
I agree. But so you could say,
sell your shoes for dollars.
Tokenize real estate.
We do need a numeraire, and it may end up being one dominant state currency. It may end up being a basket.
I agree. I mean, I don't think it's going to be this one global world currency, and I don't think currencies will go away. But I think this feeling that you always need to have Hong Kong dollars in your pocket, because otherwise in Hong Kong you can't go and pay your taxi, I think this is going to go away. And this will go away in the US, this will go away all over the world, and people will start seeing a currency as another asset and not as this pure medium of exchange. It will actually be there, and it will perform well during certain times, and sometimes it won't.
Sorry, it's a great debate, but we are running out of time. We only have 2 minutes, so final question is like, what do you see the most promising use case for cryptos at this stage? Chris, maybe?
Well, I think that we've already got two use cases that work great. You've got a digital gold with Bitcoin, and you've got Ethereum that serves as the fuel driving this revolution and as a fundraising mechanism. Those are two that are proven to be already working extremely well, and I'm sure that there's going to be hundreds more. I wouldn't venture to offer any examples because I don't think that even in 1995, at the time of the internet revolution, you could predict that 15 years later, Uber is going to change and build on top of this. It's going to come and change the way transportation works. I don't think anybody has enough foresight to do so, so I won't even try it.
Yeah, so as I indicated before, I think blockchain systems, tokens are going to permeate all aspects of society. We're going to tokenize all the things: money, identity, reputation, certificates, agreements, commodities, etc. Director Bill Hinman of the SEC spoke a few weeks ago. He spoke about Ether and that it's not a security, but he also spoke about networked business models and tying those networked business models together with a consumer utility token. So those networked business models can represent global villages, essentially. They can be protocol-based open platforms, and essentially you can have developers with an idea incentivize mechanism design so that they define a set of goals for your system, and they define rules for the system, and they rely on the selfish behavior of the different actors in the system to accomplish the goals. So it's a new kind of construct for collective action that's a little bit different from a corporation.
Sorry, time is up. So
I'll give you a fast answer, just as an investment idea. The cross between crypto and gaming. There are 90 times more gamers than there are crypto players, and so look for opportunities where you can marry those two places up.
Okay, do you have a quick one
Yeah.
sentence?
For me, it's the one that got me 2014 into blockchain. It's data storage. I'm a medical doctor storing medical data. Great use case.
Okay, great. Thank you very much.
Thank you.
Thank you.
Thank you.